Hi, good morning. We just received the September 2022 USDA report here at 11 a.m. Central Time. D's corn is currently up 6 cents. December wheat is currently down 6 cents. And the big story of the day with November beans up 53 cents as of this recording. Today, I've got Taylor Sauder in our Fort Collins, Colorado office alongside Brian Basting here in our corporate headquarters in Bloomington, Illinois. And we're just going to hash out the ups and downs of the report today. First question is for you, Brian. What did you make from the corn balance sheet today, and what really stood out to you?
If we look at the corn balance sheet today, Drew, the biggest surprise was on the acreage. Actually, the yield at 172.5 was right in line with trade estimates. However, the USDA elected to lower harvested corn acreage here in the U.S. by about 1 million acres from what it was in August. Now, what that means is we're looking at a much smaller crop than what the trade expected. We're looking at a crop of about 13.9 billion bushels. The trade was looking for closer to something closer to about 14.1. So basically now we're looking at a market that's going to be turning to two questions, Drew. Are we going to see these yields realized? Will they bump up from here, or will they continue to fall? And what about the demand side? One comment I'll add on the balance sheet, Drew, is that the balance sheet on the demand side was weakened today. USDA took feed residual down from last month. They took the ethanol projected use of corn down from last month, and they took exports down 100 million. In total, 250 million bushel decline in the total usage. So we've got a carryout projected at 1.2 billion bushels, Drew. The big questions are now, as these combines begin to roll, will these yields be realized, and are we done seeing declines in usage forecasts from the USDA?
Both good questions, Brian. Taylor, I think I may know what you're going to say, but I'll ask you as well. What stood out on the soybean ledger side of the balance sheet?
A lot of the same things. Yeah, I don't think we expected the the acres to come down a little bit, and then also the yield too on new crop beans came down. And just looking at the old crop balance sheet, we took about 20, I think it was 25 million bushels we added to the export program for old crop, so that shrunk down the old crop balance sheet a bit. And then now our new crop balance sheet. They did revise exports for new crop by 70 million, which I think makes sense a little bit. They took China demand down, and I think you need to account for all this Argentine soybean selling here too in the last week. I don't know if the USDA is accounting for that necessarily, but they've had some currency changes down there, and the farmers sold about 4 million tons, which is going to go straight to the market. But you net it all out, and we're down to 200 million bushel carry out for new crop beans, so it's pretty tight. And we're seeing the board respond accordingly here.
Sure. Thank you, Taylor.
Mm-hmm.
Brian, can you give us a little bit of an update on the world wheat situation? Certainly some rumblings out of Russia over the weekend, and obviously that has a big impact on Ukraine and global wheat S&Ds as well.
The biggest news in the Black Sea in this report, Drew, was larger crops compared to what they were in August. Now we're looking at a record crop of 91 million tons in Russia. There are some who believe that number could edge even higher in future reports. However, USDA did leave exports unchanged. Now that's still a record export forecast at 42 million tons. So it's something we're going to be monitoring very closely here as this crop year proceeds. On Ukraine, Drew, they left the exports unchanged at 11 million tons, but they did bump up the crop size 1 million tons. The big question now, Drew, is what's the fate of the export corridor? The original agreement was 120 days, which would put us around mid-November for the corridor terms as they are written today. There's some questions, though, regarding whether that will remain intact even over these next 90 days. A lot of uncertainty about, 60 days, a lot of uncertainty about what Russia will do, given their concerns about where the shipments are headed at this point. It's a very fluid situation, Drew. What we can say, however, is that as this first quarter of the crop year wrapped up for wheat, U.S. exports were very routine this first quarter. We are seeing a bump up as the second quarter begins. But the focus now, Drew, I think in the wheat market will gradually shift. Obviously, the focus will remain on Black Sea, but will gradually shift to these crops in Southern Hemisphere. The Argentina crop is pegged at 19 million tons. That's down from last year's record. but the Australia crop is pegged at a bumper crop this year. So what will the weather be like here the remainder of September and especially October for those two countries could dictate the wheat market trend, along with, of course, what happens with Ukraine and Russia.
Absolutely. Thank you, Brian. Taylor, shifting gears back to corn and soybeans. You've got the numbers in front of you now. What are your thoughts on DEES and NOVE forward corn and soybean spreads moving forward as we go into harvest?
I think soybeans, I mean, just given the balance sheet changes, are going to stay firm. We're seeing that respond accordingly here this morning too. I think last I looked here, March was up, 2.5 cents, and so we're nearing even money now on that spread, taking a lot of the carry out, and I think you're going to see, the bean balance sheet stay pretty tight here. You got to get into probably Brazil crop and really have a handle on that to know, whether or not we can relax those spreads or not. But for inverses to stay around, I think that's going to be the case. And then for corn too, it's a tight balance sheet. To see the acres come down and tighten that up a little bit more here. I think we continue to see, probably not a lot of carry in the DEES March, maybe a little, and then as we get out forward, probably around even money in the March, May, and then inverses forward. And export pull right now doesn't look like it's going to be huge, but we've got a really strong domestic pull, which is keeping the balance sheet really tight, or I'd say the available supply of corn really tight.
Makes sense. Mm-hmm. Thank you, Taylor.
Yeah.
Brian, what's the forecast look like here for corn and soybeans as we ramp up harvest here? We've started to see some anecdotal yield data from differing states here, just what are you going to call gut slot harvest? What time frame here as we move forward?
Some of that, Drew, will be contingent, of course, on the weather here as we get into the dry down period. We're looking at an updated forecast, Drew. I'd remind the viewers on Thursday, September 15th, from the National Weather Service for the month of October, which would be critical. We're going to continue to see warm conditions, which may accelerate the dry down a bit, or we're going to see some type of shift in that forecast on Thursday, again, the 15th. Right now, Drew, my best guess is that with the corn maturity running a bit behind normal here, for example, this afternoon's crop progress report, I think we're going to see corn mature less than a third of the crop. So as we enter the second week here of September, the crop is not way behind, but it is, a bit behind. I'd say week to 10 days in some cases. The exception would be Nebraska, of course, where it's been quite dry. That crop is ahead of schedule by a bit. But my best guess today, Drew, given normal conditions, would be somewhere around that mid-October to late October time period. I think it's going to be a very interesting harvest to see how producers respond to these attractive prices. We're looking now at approaching or above $6.50 off the combine for corn.
Taylor, last question for you.
Now above $14
a lot of rumbling around the globe and macroeconomic markets. What are they telling you right now? And any impacts on agricultural commodities that you can see from a macro level?
Yeah, there's a lot of things going on. Brian already hinted on the war, and so I won't cover on that. But you have a lot of inflationary pressure, and then this whole energy crisis in Europe, and I think we are going to curtail some of the demand from that. We're seeing some inklings of it already, and then as you get into China, I think the USDA started to account for a little bit of that too, where they continue to have COVID policies and lockdowns, and we've seen their beef. It was last week they trimmed their beef demand, their imports a little bit, and then we've seen them here today, cut back on their imports a little bit too for other ag commodities. So I think we see more of that. It's really hard though to see, how does inflation impact demand, and oftentimes you won't know till 4 or 5 months down the road. But I think we'll see more of that here this year. And then obviously, we just got to get into the winter and see how bad of an energy situation this will be in Europe. And then, just at home here, at least this week, we've got the potential railroad strike too that could happen on Friday night at midnight. So that could throw another wrench in some of the things going on in the ag market as well.
Enough headlines to go around for everybody.
There's a lot.
Well, thank you both today for your time, and we'll look forward to seeing you here at the end of the month on the September stocks report. Thanks, and have a great day.